This is Jay Martin.
Mike, it's great to have you back in the studio.
Yeah, good to see you again.
I'm excited that you're here, and it's an exciting time to talk about Sitka Gold because, I've had you on the show before, but Sitka is a story that, one of the companies that was able to stay busy, strategic financings and work programs through the very hard years a few years ago, right? And as a consequence, you're sitting here today on the cusp of a new metals market, right? With a new mineral resource, over 5 million ounces. You're cashed up for an incredibly extensive work program in 2026. I kind of feel like you've been very busy. You guys have accomplished a lot. You've moved the needle a ton. Sitka is way more valuable as a business today than it was just 3 years ago. Due to a bit of a retraction in the market, right? You're not being rewarded for that, but that's quite frankly my and my audience's opportunity. But the point is, I feel like you're on the cusp of a massive sprint in 2026. A 60,000 meter drill program that's already bought and paid for, cash is in the treasury. Exactly. So there's lots to come here, right? And you're in a small group now of 5 million plus ounce projects up in your area of the Yukon. So I want to get into all of that, right? Yep. But for somebody who's just putting like fresh eyes on Sitka today, maybe back us up a little bit, reflect on 2025. What were the key milestones that you're most proud of? And somebody who's just looking at this story for the first time, where should they focus?
Okay, 2025 was a big year for us. We did 30,000 meters of drilling. From 2020, which was the first drill holes ever that we put into this project, we'd only done 30,000 meters. So we effectively doubled the amount of drilling.
Yes.
So that program was focused on, we had a couple known deposits. We're focused on expanding those. And we had a third very intriguing target area called the Roscobble, where we had 2 drill holes, the first 2 ever diamond drill holes in 2024 that intersected a new area that we felt very strongly had potential to be a third deposit discovery. And it ended up being exactly that. We put 12,000 meters, 41 holes in it in 2025. And out of that produced an initial mineral resource estimate of 2.25 million ounces in this Roscobble deposit. So really that was the key thing. Our company has been focused on discovery. And like I said, the first drill holes here were in 2020. 6 drill holes. 2 of those drill holes tagged. One tagged the Blackjack deposit. Another one tagged the Eiger. And as you mentioned, through the tough times, 2020 going into COVID and all that lovely bad memories that we have, we were able to keep going based on the success we had at the drill bit and basically doubled the program every year. And that's exactly what we're doing. We've made a third discovery and we're doing 60,000 meters of drilling this year.
Yeah, doubling the program again.
Yeah.
And your CEO, Core, won an award last year. I think Yukon Prospector of the Year.
Yeah. Core, my background, I'm a geologist. I've worked in the Yukon most of my career, 20 years with the Yukon Geological Survey. And that's when I first met Core back in the mid-90s. We both have gray hair. But anyways, he's a geologist and he's worked in the Yukon most of his career, made some previous discoveries. And then, of course, the success that we've been having at RC Gold has been under his direction. And he's a prospector at heart, and he won the Prospector of the Year award, which is, it recognizes the sacrifice that prospectors and their families and everybody makes to be successful in this business. So it was a well-deserved reward and very moving for Core. We know a lot of people that have received it in the past, and it's a big honor and it's a big recognition of a career well spent.
Yeah, no doubt. Well, congratulations on that and everything else. So when you reflect back on those years and Sitka's ability to continually go back to the market for capital when you needed it, would you say you were able to parlay previous results into the next financing for long enough until you were able to get your next mineral resource to the market?
We were on the discovery train right away. Like I mentioned, those 2 holes in 2020, 2021 was the first, what we call the discovery hole into the Blackjack deposit. So we were always producing really good results. Our project is in a great location. It's road accessible. We're only a 2-hour drive from Dawson, and we're in what's known as the Tombstone Gold Belt, which there was the producing Victoria Gold Mine. The Eagle Mine went into production in 2020. So we're 50 kilometers away from the exact same style of deposit that's a producing mine. The original mine, Fort Knox in Alaska, they're all the same type of geology, hosted in the same age intrusive rocks. It's been producing for over 27 years, 9 million ounces of gold. So you're into a proven style of mineral deposit that is showing that it can be economically mined. So, you know, being road accessible, being on to another one of these reduced intrusion gold deposit systems, just kept the ability to be able to raise money. And of course, those exploration results have driven that.
Is the Tombstone, is it fair to say it's still a bit of an emerging region? Like given Eagle's success, Ormac at Banyan, you guys now, like is this a new region on people's radar?
Yeah, absolutely. Snowline Gold. Snowline Gold really brought the attention to it. It's known as it's a belt that stretches across Yukon and Alaska. For those that don't know, it's 90 million-year-old intrusions, and many of them are hosted or host gold mineralization. First discovery, Fort Knox, as I mentioned. I think Snowline Gold and us were exploring at about the same time, starting in 2020.
Yeah.
And these are typically sub-gram. Like Victoria Gold, the Eagle Mine was 0.63 grams was their initial grade.
Yes.
Fort Knox was 0.83 when it started. They're mining 0.3 now, but they're typically below a gram. Snowline Gold made their fantastic discovery of Valley. It's 1.25 grams. Yeah. Our Blackjack discovery, 1 gram. So we recognize that these deposits can host higher grades. They're still, it's hard to call a 1 gram deposit high grade, but they're higher grade, low grade deposits. Being that they're bulk tonnage, you can use bulk tonnage mining techniques. They're very attractive. They're consistently mineralized. They're not super variable.
Yes.
So yeah, a lot of attractive things about these deposits. They react well metallurgically, whether that's classic gravity recovery through a milling process like Fort Knox did initially, or heap leaching like Victoria Gold did and Fort Knox does now. Mm-hmm. The Brewery Creek mine operated in Yukon back in the late 90s, produced a little over 250,000 ounces heap leach operation. So that technology, whether it's conventional milling or heap leaching, has been proven to work.
Could you do me a favor, just because we have so many new investors showing up to our industry and we're seeing them as new subscribers to our podcasts or new attendees at our conference. And, obviously the grade matters more depending on what strategy you're using to extract that metal. And you talked about how the grades up in the Tombstone Belt might not be considered high grade elsewhere, but because of the strategy with which you extract it, it makes economic sense.
Yeah, like 1 gram now, given the price of gold, is pretty attractive. That's valuable rock. But, when you're looking at bulk mining techniques, the 2 techniques I mentioned is, conventional mining and milling, which, it goes into a mill, gets crushed up into a powder, you leach the gold out. Heap leaching is where you just crush the material down to, say, 3/8 of an inch of gravel, put it on a pad. It doesn't have to go into a mill complex, uses less power, lower capital costs. So there's a trade-off looking at the grade of your deposit, because typically heap leaching will get about 10% less gold recovery than running it through a conventional milling operation. So that 10%, when you're looking at a 1 gram per ton deposit, 0.1 grams, that's you're up in the, significant 14, 15, 20 bucks. That's, you don't want to leave that material behind. So that's where some of the recent discoveries like Snowline Gold and Banyan, they're looking at milling techniques to extract the gold. Okay. And that's what they did at Fort Knox originally. But they also have a heap leach component, because obviously we've got 1 gram material, everybody does, but you also have material that's lower grade. Fort Knox is mining 0.3 grams per ton now on a heap leach. So that, flexibility to get your higher grade material through a mill and a higher recovery, but still be able to produce gold using a lower cost technique such as heap leaching is likely what I envision most of these new projects are going to include, including ours.
Okay, so 60,000 meters planned for 2026. And this program is underway. You know, an advantage that you have is that your project is road accessible, which allows you to stay at work 12 months a year. I'm not sure if there's like seasonal variability in the aggression that you can proceed, but
yeah, we don't make people work over Christmas. And we wait until after Valentine's Day to move out to camp. So we do take a break, but yes, we can work year round. I mean, it's working in the winter, there's some things that are advantageous and some things that aren't. Like it's colder, obviously, you can get cold stretches, but really the advantage outweighs some of the negatives, you know.
100%.
So we're able to get in there early and get a good start on the season. So we start, like I said, February 15th, get in and get moving on the project. So that's what we've done this year, and 60,000 meters will work through till probably September, October to reach that target. We'll see how the year goes.
Okay. So huge program, 60,000 meters, almost the entirety of what you've done thus far in the company's history. And I think the price tag for that's around $25 million. You've got over 40 million in the treasury, so you're fully funded. So just walk my audience through the strategy with those 60,000 meters, Mike.
Yeah, so I mentioned that we made a third discovery last year, the Rosgobble deposit. Well, we've only had that 1 year of drilling on it. So half of that 60,000 meters, 30,000 meters.
Putting 30,000 on Rosgobble.
On Rosgobble.
Okay.
We really, I mean, we've drilled the central part of it, but we haven't stepped out. It's open in every direction, north, south, east, west.
And the resource at Rosgobble right now is over 2 million, is that correct?
Yeah, 2.25 million ounces, 100 million tons at a grade of 0.7.
Yeah.
So now we look at that. We talked about 1 gram per ton grades.
Yes.
Within that Rosgobble, if you change, like that's at a 0.3 gram per ton cutoff. If you raise that cutoff a little higher to 0.6, it's 1.5 million ounces at a gram. And it's in the eastern end of the deposit, close to surface. So there's an obvious nice starter pit there. But regardless, we see a big footprint. There's other exploration data, geophysics, geochem that we have that suggests it's much larger than it is. So that 30,000 meters is designed to keep stepping out. It's an inferred resource at that inferred spacing to understand and see the overall size of this deposit.
Yes.
And once we get to the boundaries of this new zone, that's when we start infilling and upgrading the resource. And that's the strategy for every one of our deposits on the project.
Okay. I think I'm clear on Rosgobble. So the balance, the next 30,000 meters, what's the game plan there, Mike?
Yeah, well, on the rest of it, half of that's going to go to the Blackjack and Eiger deposits. We did upgrade the Eiger deposit this year. We upgraded that resource. It was 440,000 ounces. It's 535 now. But also Blackjack, we've expanded it, but we didn't upgrade the resource yet because there's some areas near surface that we didn't get to. Just need a few more drill holes to kind of outline that. And then we'll be able to kind of give a nice round number for that captures the last bit of data. No sense updating it now and then adding a few more ounces next year. So a little bit more work to do in there before we update that resource. And also there's underground potential in the Blackjack. We've drilled quite deep on it. The deposit now, if you look at the surface exposure, the highest point in elevation to our deepest drill hole, that's over 1 kilometer distance. So we have drilled below what would be the limits of an open pit, and we've hit mineralization, higher grade mineralization at depth. So we're doing some work on that as well to see that potential for this open pit deposit to eventually transition into an underground. And then a little bit more at the Eiger, and then 10,000 meters at an area called Pukaman Contact, which is midway between the Rosgobble and the Blackjack deposits. So in the same general area, all these deposits are within 5 kilometers of each other.
Yes.
And another little zone called the Bearpaw Breccia that has some historical drilling on it as well. So
collectively, there's like 11 targets?
There's 11 intrusions.
Okay.
These intrusions all have known gold mineralization with them. There's a cluster that we call the Clear Creek Intrusive Complex. There's 8 intrusions in a tighter area. That's where we focused most of our attention. And that's where most of our attention's going to. Because as we've been focused on discovery, we've built ounces, but now we got to turn those ounces into value, right? Okay. So it's turning vision into value is our motto. And so how do we take those ounces and convert them into, show the economics and
higher confidence category.
Yeah, higher confidence and move this towards economic studies and demonstrating that there's a mine here.
Yes. Okay. And so for 2026, what people can expect is continued step-out drilling at the Roscobble. Roscobble?
Everybody says that. I say Roscobble. I'd have to look it up. I think it...
Yeah. I heard you tell a funny story about how you suspect a lot of these targets were named. It was one prospector in the woods with a copy of The Lord of the Rings.
Yeah, exactly. And there's J.R. Tolkien names Roscobble, Pukum, and Iger.
Sure.
So yeah, he was bushed.
And so the focus at a high level is convert the confidence category and increase the ounce count, of course, right? And you've got the cash to do that. And what we're going to see on the ground is continued step-out drilling at Roscobble to see exactly how big it is, because we haven't found the edges yet.
Right.
And at Blackjack, we're looking more of a conversion strategy, right? To convert the confidence level of those ounces.
There's some near-surface stuff to do. And then as well, the deeper material, right? Because you look at it, it's definitely, we've hit mineralization below the depths of an open pit.
Yes.
But we have to understand the upper part of the underground, right? Where are you going to transition from an open pit to an underground, right?
Okay.
So understanding the depth of that deposit around the limits of a pit is very important information as we move into economic studies, because we're obviously going to start as an open pit operation. All these deposits outcrop at surface, they're open pit, but eventually you'll transition to underground. We know that on the Blackjack, that potential's there. Okay. On the Roscobble, we don't know yet. We need to drill to depth. We've only drilled to 400 meters as the deepest, but if it has the same depth potential that Blackjack is demonstrating, well, we see how these deposits can grow significantly, and we need that information to design our initial mine plan.
Yes. Okay. So we've shown the resource at Roscobble, Iger, and Blackjack. Next up, we're going to determine what's at Bear Paw and Pokemon.
Yep.
Okay. And we've still got another half dozen targets in the quiver. I suppose you and your team have an internal strategy about where to go next, but there's lots of optionality there, right? And you'll get there when the time...
Exactly. I mean, it's the exploration process, right?
Yeah.
Some of those have had a couple drill holes on them, some haven't. Some have had soil geochem, some need more geophysics. So you're always advancing them to, narrow your target focus to where you're going to drill, right? Yeah. The last thing you do is drill, so we got to keep developing those targets, and we're always doing that in the background. And when we're confident that we've got a solid drill target or we need to drill for more information, we'll do that on some of these targets. But, realistically, there's decades of exploration left on this project. It's, over 400 square kilometers. Like you mentioned, 11 intrusions known. There might be hidden ones. We're working on that thesis as well.
Sure.
So there's a lot going on there. But like for now, the goal is to demonstrate that there's a mine there with a solid growth potential behind it, as well as a nice curve as far as the size that you could be developing, the number of ounces, demonstrate it's a tier 1 project.
Yeah. Well, you're in a tier 1 jurisdiction, that's for sure. Okay. When you think about the bigger picture strategy behind Sitka, like there may be a couple ways to think about it. Right now, we're going to increase the ounce count, we're going to prove economics, and we're going to show the market there's still exploration optionality, right?
Yep.
We often on this show talk about mining companies like melting ice cubes, right? They are less valuable every day they're in operation because they're extracting the value that they have in the ground. Yeah. So they need to have a strategy for replacement, right? And they either have expansion of the resource, development projects in the pipeline, or there's seed funding exploration somewhere else. Like internally with your team, when you think about that bigger picture strategy, do you think about the M&A environment at all? Or are you like, no, our job is increase the ounce count, improve economics. We're married to the process, not the outcome. Walk me through that, Mike.
Yeah, I mean, we don't have control over the M&A process, right? You know, we feel that obviously if we find a tier 1 asset, that puts us in the targets of many companies. But our goal is to keep advancing this project towards production, prove that there's a mine here.
Yeah.
And that's our goal. And that's the goal for this year, is to get it to that point where we can quickly move into a PEA, and then shortly after that, a PFS, right? The one thing we're in control of at this point is the timeline. Okay. So by working hard, efficiently, and quickly, you know, a 60,000 meter drill program's a lot of drilling. We can condense that discovery timeline and get it to the starting line on those economic studies. And, you know, with 5 million ounces, I mean, realistically, we're there now.
Yeah.
But this Roscobble being a brand new discovery, we need to know, you know, the general size of that. So we've got to spend this year.
5 to 10 is like the window that you need to be in. Yeah.
Yeah. I mean, really, I mean, we've got a pretty nice deposit there now between Roscobble, Blackjack, and Eiger. Yeah. But we really need to know the size of these a little bit more, especially Roscobble, being that it's so fresh, so new. Mm-hmm. And this year's drilling will do that. We'll know the size of that deposit. Yeah. So that's critical. And then designing a proper mine design behind those 3 known deposits, and anything else we discover in the meantime will likely just feed into a longer mine life or may change it. But I think we're at the point now we need to move into those economics. Yeah,
I agree. And then, so sticking with the concept of timeline, do you have an expectation for that start date? When could investors expect you to move towards a PEA?
We've stated that we'll start next year, early 2027. The work we're doing now is feeding into that. We'll be doing, you know, work. It's an ongoing process. So we'll be moving into the PEA in early 2027. Mm-hmm. You know, hopefully by mid 2027, we get out that and then immediately launch into pre-feasibility studies. So that's where, again, this year, you know, depending on what point we hit the limits of these deposits, then we start upgrading the resource. Yeah. You need an upgraded resource to move into pre-feasibility studies. So that's all. We've got the long-term vision on how we march through these PEA, PFS feasibility study as quickly as we can, because we're in control of that timeline. So again, by being efficient and aggressive and smart, we can shorten that. That's our goal.
Yeah, I think it's the time to be aggressive. You were very patient and strategic when capital was scarce. Now you have a lot of it, plus you have a resource and you have a market tailwind. It's a very exciting time to be Sitka Gold. I think. Do you have an expectation that you'll go back to the market for capital in advance of the PEA? I know you're cashed up for 2026, and that's taken care of.
We're cashed up. So we've got, you know, a little over, we had 45 million. We're drilling now, right? So we're spending money. But we've, you know, $30 million flow through budget for this year. Right. We'll get through that. Okay. We'll still have $12 to $15 million hard money at the end of the year. So the company's in a great financial position, but we're in the business of spending money to prove there's a mine here. Yeah. So obviously we've got an aggressive budget schedule this year. We're going to have to raise money at some point. Yeah. Right? Moving into that PEA to fund a big program again next year, right? Yeah. We'll be at the PEA phase, but then depending where we are at the upgrading, we're going to need to go back, start infilling these, upgrading the confidence in the deposits. So yeah, we're not done spending money yet. So we're not done raising money yet.
Good answer. I like it. All right. So, we could probably expect a very rich news flow calendar from you guys, right? Work program's begun. You anticipate being complete September, October. Yep. The 60,000 meters. And so between now and then, probably a steady flow of news. Yep. Okay.
Yep. Between now and then, a steady flow, and after too. Typically, last year we ended up finishing end of September, and our last drill results, by the time they made it through the lab, were, you know, into the new year. Yeah. So yeah, it takes a while for the lab to clear the backlog, and it's a busy year in the Yukon this year. Banyan's doing a huge program. Other companies, Fireweed Metals, Fuerte, things are booming up there. There's a lot of great companies doing great work. So we're not alone in overloading the labs.
Yeah. Let me just ask you a question on that. Is that just a symptom of where the market is? Yukon is an incredibly favorable jurisdiction for mining companies, but it's been busy. It's busier now, though. Is that a symptom of higher gold prices? Is that what's driving that? Or is it, the other thing I might point to is that jurisdictional risk matters way more today than it did even 5 years ago, let alone 15, right? Yeah. And so that's a bigger consideration for investors. And I think a lot of us are looking closer to home for projects where we can trust governance, trust regulation processes, and privatization of assets and all this. What's your take?
Yeah, and I think your point about jurisdictional risk is obvious, right? And so the Yukon's known as a great jurisdiction to work in. So if you look at, Selkirk, right? Partially First Nation owned now. Yeah. That was a former producing mine, closed down.
That's the Minto mine.
That's the Minto mine, right? Yeah. So we got a new group of solid people in there, including the First Nation, that are really taking a methodical approach before reopening that mine. They're establishing the resources, putting a lot of work into expanding that before they go back into production. The last people maybe went into production a little too quick. So it's metal prices help, but it's timing and who's involved in that project. Same with Fuerte. That was a Newmont, Goldcorp found it, Goldcorp had it, sold it to Newmont. Newmont took it to a point and has been sitting on it, but now Fuerte's got their hands on it again, backed by Pierre Lassonde and a great list of investors. So again, a big kind of leg up for the jurisdictional risk to have investors like that. And they're moving towards getting into, development next year as well. So we're seeing not just great exploration success, but projects moving into mining, which is the ultimate goal.
Yeah, 100%. 100%. Mike, I'd love to have you back on midsummer. Actually, I want to make it to your project midsummer. I'm trying to find a time where I can get to the Yukon, visit Sitka, visit Banyan, maybe Snowline and Fireweed, and do a bit of a site tour while I'm up there this summer. And I'd love to...
Easy cheesy. It's a 2-hour flight out of here. You could get that done in a weekend.
Yeah, no doubt.
Which is amazing. People think, the Yukon, sure, it's in the north, but it's accessible. It's got better infrastructure than any of the other territories. So as far as getting up and doing what you're talking about, we've had people come from Toronto on a Friday and they're home Sunday night to visit our project. So, we might be in the north, but it doesn't mean that it's not accessible. I mean, we're a 2-hour drive away from an international airport. Yeah. Name me a bunch of projects in Canada that are within 2 hours of an airport.
100%.
So, yeah.
Maybe we can do our next update from site.
That'd be fun.
Right.
Yeah.
Well, look, thanks for coming in today. Congrats on 2025 and the years leading up to it, by the way. It's, we talk about this a lot on the channel as well. It's often the companies that stay busy and strategic, patient when they need to be, and aggressive when they can be, when markets are tough and capital is scarce. And it's those companies that set the high water mark when the market begins to favor us, right? It's my personal opinion that Sitka is positioned in that sweet spot right now. That's how I feel about it. Time will tell if I'm right, but I have a feeling you're going to make me look smart. So we'll see. But I'd love to do an update mid-program through the summer when we've got some of those results back and you get a sniff at what you could expect, right? Coming to that September, October conclusion.
Yeah, exactly. And I mean, something we didn't touch on. I mean, these deposits, they're common geologically, but what's uncommon about our Rosgobble discovery is tungsten. We've announced some earlier tungsten values. We reanalyzed 2 holes and they returned some pretty significant tungsten values. So we're analyzing another 34 holes and we're getting results back from that to demonstrate that tungsten could be a significant byproduct, which is unique. I mean, these deposits are known to be associated with tungsten, but the amount of tungsten we've seen is pretty significant. So look for news on that in the short term. And it'd be great, in the summer we can talk a lot more about that. But that's a real kind of neat twist, to have a potential high value product that's a critical mineral as well. And it potentially could add a lot of value to this project.
Yeah, thanks for bringing that up, actually. And I want to ask you, tungsten, is it like antimony in that it used to be a cost burden and now it's a value add?
It was never a cost burden. The thing about tungsten is it's always been dominated by Chinese production.
Sure.
Right? And so when the price of tungsten would get up and projects like the Cantung mine that's just outside of the Yukon would be in production, China would flood the market and the price would go down.
Sure.
Well, China is now a net importer of tungsten.
Okay.
We're seeing, obviously a critical mineral and wanting to secure domestic production. All of a sudden, if you have a project that produces it as a byproduct from a potentially economic gold mine, that's a pretty sweet source of tungsten. So it makes it really, really unique. And so I think we'll see that price volatility that used to happen in the 80s, disappear. Because that Chinese production's been going on for a long time and it's tapering off. So it's, it's interesting times as far as critical minerals go. And
it certainly is.
It's not often, I consider gold to be critical. Sure. But, when we add tungsten, we can truly say we've got a critical minerals project here.
Yeah, and I love that. And it's emblematic of the new sort of era, new paradigm that we're in. I think there was 25 metals on the critical metals list in 2018. There's like 30 or 60 now, I joke that given another 10 years, we'll have the whole periodic table on that thing. But that's kind of a sign of the times, right?
The truth.
Yeah. Underfund an important industry like mineral extraction for long enough, you run short on everything.
Yeah.
And that's the era that we're in. I'm preaching to the choir. My audience hears this all day long
me
from
too,
me. So it is what it is. But it's an exciting time to be a mining investor. Thank you for coming in, Mike. I always enjoy our catch-ups.
I really enjoy chatting with you, Jay.
I'd love to do the next one from site if we can make that happen.
We can make that happen. Stay tuned.